Good morning and welcome to the Early Bird. And here we're looking at the XJO, the cash market, the ASX 200, and you can see that it's taking up quite a few years there. And this morning I mentioned the price of 2,700, and that comes from this low point down through here, and that also comes from the fourth wave as well. So it's quite normal for when a market's correcting to come down to the fourth wave of one lesser degree, and that's where that 2,700 comes in from there. This would be the top of the third wave, the A, the B and the C here for the fourth wave, and an extended fifth wave up into the commodity boom. And resources are normally the last to top out in a cycle, and we here in Australia are resource itself. So yeah, look, in a Elliott wave point of view, that would be the point there. So yeah, what can you say? It's pretty full on, but there you go. So these are just the levels here, the major levels in orange and the medium levels in grey there. And as we can see here, we're slowly sort of finding the 4,000 here as the resistance, and we'll be working with the minor levels in this area here. Now, the other thing that I've mentioned today or previously as well is that the 61.8 retracement level from the 2009 rally here back into here just roughly brings us into the 38 here, which obviously is the minor trading level here at 38, so that's going to be important there. Now we can see that there's a fair bit of supply here, so we've got the 61.8, we've got this level here, so there's a lot of focus on this particular level. So once that moves to once that becomes the resistance here, there is also support all in this range from here as well. So the next level down is the 35 level here. At 34 shouldn't really be there, even if it's a Fibonacci number, that's probably why it's there. But the 38 and the 35 would be the numbers that we're working with on the main point as minor trading levels. The sub levels that would come in, which would be important, would be the 3650 when that comes into play, and also the 33,772. But that's close enough to the 3/8 there in that particular case there. When we look at other markets, and while we're looking at the bigger picture, I'll just have a quick look at the S&P 500 is fine. So with the S&P 500 here, we've been considering this situation, the target's been the 1,000, of course, major trading level, one of the strongest number in the market, followed by 5. Now, we've been considering this here a wave 4 here, but you'll see on our S&P 500 charts, it's labelled as a down for 1 and back for 2 here. So we could be going down much further than this as well. On the early bird, I'll just continue to work this as a wave 4 here, and we'll look at 2 structures unfolding within this particular structure here. We'll keep them all on the table until proven otherwise. That's the go with the Elliott. So as I mentioned yesterday, we've got this down for 1 here, back for 2, and the third wave coming down. So we'll follow that 1, 2, 3, 4, 5 down. So just looking for a structure like that here. So that 1 there is that 1 there, the 2 is this 2 here, and the third wave down, and then the fourth and the fifth. So it will take us down very close to the 1,000, if not further down there. The other count for this, which has got to be put in, is the this move through here as being the wave 4 here as an A and a B and a C, and then the impulse wave, which is impulse is 5 waves. So, but starting from this point here where we go down for 1, and then an A and a B and a C counter trend rally for wave 2, and then down for 1 and back for 2, and so a much larger structure happening. Now, if that was the case, then that would be more in line with this being a wave, top of wave 2 here, and then unfolding down in a wave 3 there. And that's quite possible, because when we look at we look at the Dow Jones here, bear with me here. Okay, so this is the, just take that off. This is the Dow Jones at 11,500 here. And you know that we've been looking at this medium level here as the same picture, exactly the same structure within all of this in terms of the 2008 bear market over here. It's the same pattern at the same number and at the same time, the August, September and October. And October, as you know, or may know, it can certainly bring a bear market into play if that's going to be there. So when we're looking at this structure here, you know, back in 2008 here, then getting this into play here, you know, we've got that three-wave counter trend there that we've just drawn out through there. That's to there. And then we've got the series starting down. Now, I've started this count down in here in terms of down for 1 and back for 2, and then the third wave coming down through here. So this is the bounce that we need to be aware of coming up shortly, that I talked about close to the 10.3 mark down here, which I'd mentioned before. This is coming off the 10.5 here, and you know, it can come off the 10.5, and we'll see what structures that come into play over the Wednesday and Thursday there. But once again, these down for 1 and back for 2 here, same sort of structure. So we could be looking, you know, we've been working through this as a mirror image of what's been going on now, and it's been pretty accurate. So what I mentioned this morning about covering short positions in this situation at 10.3, this is what we'd be sort of looking at here. So we do need to be quite diligent about the 10.5 where we are at the moment as well. So we'll bear that in mind. So we've got a lot of short trades out there. I have no problems in cutting them and going long, and then waiting for a retest back up here somewhere. So, but anyway, keep studying this picture in relation to the picture that we have now. I just wanted to point out that that this may turn into a more of a larger picture than we first thought. Well, it's not that we first thought it. We're basically figuring that if we've got 5 waves down through here in terms of like 5 waves like that there, what happens next at the 10,000 or thereabouts, or 10.3, whatever, is we have a counter trend. And I thought the counter trend may come back up to around this level here. So we've got 5 waves down and 3 waves back up, and then another 5 to the downside, which would take us, you know, way down past 10,000 through there. And that's why you can see that the 2,700 on our local market is not a far cry when we're talking about larger structures like this. So yeah, we'll see how we go with that. So we'll be using all of these counts, and we'll just do our best to navigate and trade that, because there's a huge difference between analysis and trading, of course. Okay, coming back onto the intraday level here, this is the DAX here, and just keeping an eye on this here. And as we've just been watching this A and this B and this C unfold here, so we've nailed it there. So we're looking for this to come down and make a new low here. Now the FTSE's already moved down and made a new low through there as well, intraday chart 30-minute here. So it's moved through the 5,000 now, so it's starting to find it as it was support, and now it's finding it as resistance there. So that will continue to play out through there, and this will follow the S&P 500 count there. But the reason that brought the DAX up for is because they're all in the same nest, and once the DAX starts to find the 5,000 as the resistance, then that's a big psychological point for Europe as well, being under the level rather than above it as support. So that's all slowly sort of unwinding. There's still a lot more to go in all of that, and you know, we'll probably see even a bounce off the the time that the Dow, you know, how far will this come down before the the Dow finds its low at 10.3 or even 10,000 or, maybe even 10.5, where we've just been looking at the bigger picture again. So, I mean, all we need to see here is, a low, below here as well. So, and, it can be a short wave structure. This is a nice long third wave in the middle here. So the extension's in the third wave. So that means that wave 1 here and wave 5 will be about the same in terms of time and distance there. So it's something to be aware of there. Once that wave 5's in there, we'd see a bounce back up and then a collapse after that as well. So you can kind of tie this in with all the heads of governments organising themselves to throw more money into the fire. Okay, the Dow Jones, here we are at 10.5 at the moment, and it does appear that this would be the bottom of a third wave here, and looking at all of this through here. So we still expect more to come down through all of this. We'll just see how we go with it. But yeah, so and on the sort of intraday level here, just a bit sort of closer here on the 20-minute chart here, we can see that we've got a series of waves 1s and 2s in here. We've got the third wave that's been extending out down here, and now we should get a series of 3 and 4s in here. Sorry, 4s and 5s in this area here. And that's why I was looking at the 10.3 there. And I also understand too that Wednesday and Thursday, in terms of the cycle, in the weekly cycle, are the days that could take our stops out, and this would be for that fourth wave there. So even though it hasn't been retested, the 10,800 would be the resistance, but also know that the 10,772 would be a real strong point within that, and the other point here is the 10,650. So the 65, 72, and the 80 here, a group 2 zone here as the resistance here. So we need to see how this plays out. The 500 is significant. 5 is the second strongest number and 1 is the first. So, we're going to see something here, and we knew that when we're coming down through here as well. So this would be the time to lock in some profits here to accommodate this here. And I'm talking about trading CFDs on our local ASX market there. So this would be the time to be proactive and lock something in. And of course, we're sitting on the 3,800 mark there. And this here, of course, is the S&P 500. And this is the wave structured coming down through here. So we're looking at a wave 4 coming back up here. So we just need to allow that to play out at the 1,100 here. So we just need to allow this to do its corrective pattern within through here, and once it's done and dusted and this 1,100 becomes the resistance again on a retest, then we can look to short that down for the 5th wave there. And it's the same for our market as well. Of course, our market and our Australian dollar are running pretty much side by side at the moment, and that's also with the S&P 500 as well. So this would be a wave 3 down here, and we'll be looking at a wave 4 coming back up into the 39 area up through here, or we could look at this from this top point here down to here as a 38.2 retracement level back up here for that wave 4 there. Wednesday's going to be a bit of a V-shaped day where we have the higher in the first session and then lower in the second session, and the Thursday would be the rally as well. Here in a bull market, it'll be the other way around, where Thursday's the bear day. So we'll see Thursday's the bullish day here, perhaps. Just good to keep in mind. But our idea in terms of trading is to you've got choices when we got to the 38 here. You can lock in profits first up in the morning, or you can do in part profit in terms of keeping a wider stop, or accommodate it all there. But this 38 is the 61.8 retracement level, as I mentioned before, and there's bounces going to be here, but this is still unfolding to the downside here. But we need to accommodate that there. Okay, the other markets, the gold market. Let's just have a little look at silver first. Yesterday we were talking about this is a very obvious third wave here, the strongest and the longest and most powerful and so forth. So this is a wave 4 here. So this wave 4 here, once it's complete, will continue to the downside and take these lows out here. Of course, the 2,500 is the medium level there, and that's what you'd be gunning for there. So a nice trade within all of that there. Now, the gold market is doing pretty much, it's moved down over the last few hours. So we're looking at this as an A and a B and a C wave for wave 4 here, and looking for wave 5 to come down to the medium level here, the next medium level of 1,500 here. So we'll be looking for a 5-wave structure within this here, and that's what we'll be outlining very shortly. And the crude market here, the oil market, is in quite is in a bear market, of course, and the thing here is that the wave count is further to the downside. However, in narrowing that down a little bit, is that we can still see why we're at the 72 here, above 72 and above 75 here. We can still get a retest of 80 here. But that would be about it at max. So the halfway between the 70 and the 80 here, all the minor levels, the first one would be 78, 75, 73, 72, 71. So the 75 is the midpoint, and that would be the strongest here. The 78 is playing its part, of course, and the 72 here, the 7's got to do with the time aspect of the market. That won't be noticeable just yet, but it will certainly come into play a little bit later on there. So we'll continue to be short in the energy sector. But this will follow, this oil follows stock, so that's going to follow the Dow there. The supporting part that we've got in the markets, and I've not the first time we've mentioned this, we're coming down to the major trading level here, 300. It does appear, looking at this little pattern here that's developed, it appears to be corrective because it's got overlapping wave structures, so that does make it a bearish pattern there, so we should see a move coming down through here. But while it's in this range here, when we consider the 300 here as a major trading level, then group 1, the 10, 20 and 30, the job of group 1 is, of course, to hold the price to the closest largest number, and then under that we've got 65, 72 and 80, and its job is to support it back up into this side. So while it's in this range here, then that's it's not going to go very far, put it that way. We're not going to see any major trends come out of this here, but as I mentioned when we arrived here from the first bounce, that it's just going to edge itself lower until it works under the 300 there. So it will continue to work lower, and you just need to work with that. As this edges lower, it's obviously going to affect the Australian dollar. There's a sort of an 80% relationship there, and also our market on the 3,800 there. So that's important there. The flip side to the gold and the other markets is the US dollar here, and yeah, look, it's just pretty much going according to plan, really. We're looking at this wave 3 here and a wave 4 to come back. Now, the wave 4 of 1 lesser degree was in here at 39, I think I wrote 39.50, didn't I? We should have been 39.30 in 79.30 in here, and also the 38.2 retracement level. Oh, that's what it was at 39.50. So 39.50 to 30. Sorry, I've been up too long. 79.30 and 79.50 in this zone here. So all's going according to plan here. This will just mirror the euro will just mirror this situation here, and while this is pulling back here, we're seeing the Dow Jones rally as well. So it's also doing a wave for the Dow Jones and the S&P 500 and the ASX 200 and euro and so on. So while this is doing its wave 4 here, then the others were doing their wave 4. Now the thing is that because wave 2 here was simple, this is likely to be complex through here. So how complex? Don't know, you know, double zigzags, triangles, all those sorts of things. So we just need to allow it to play out. We can first look at our target zones, which we have done. So anywhere between the 7950 and the 7930 would be a likely sort of zone for that to occur, and we need to see that play out. So that can take 2 sessions, and that's why I was looking at the Wednesday and the Thursday on the indices there for doing that. But once that's done and dusted, we'll be moving further to the upside, because this is all in part of, if we come back here for a moment, this is all part of a big third wave going up here. So we've got the major trading level 8 there, and that's what we're sort of gunning for. And we know that we're working with the minor trading levels here at 78 and 75 here, sub level at 76 and 76.50 and so forth. But essentially, this is up for 1 here, and just simply putting it an A and a B and a C wave for wave 2 here. So this is all of wave 3 going up here. So it's a very strong wave structure going up through here. We're at the 80 now, but we know that it would be a reaction there. So we can kind of expect something like that, but not quite the same. Now this correction here by the buy, this is up for wave 1 here, and wave 2 to this point here. So that's wave 2 here. So wave 3 coming up through here would be fine. This is not quite minor wave 3 just here yet. We've still got further to go. We've got to go up here, come back for 4, and then up for 5 here. So we'll be looking for the top of the third wave up here. And yeah, so it's got a fair way to go there. That's what I was going to say then. But anyway, this will play out across here as a correction here, and then push higher, and then it will have an ABC correction after that as well through here back again. And once that's complete, then it will move up. But this is a strong third wave coming up through here, and it doesn't have to spend a lot of time here. It can just continue to sort of move up through here, and that's what we'll be looking at. But at this moment, we've got up for 1 and back for 2, and this is why we had a choice to trade this market right here. It was mentioned and put out there, but we decided to short the euro at that time because we felt that would be, out of the 2 ugly ducklings, that would be the better one. Okay, so I think that's that for that. And so the euro's doing the mirror opposite here. It's doing its move up through here, so as a wave 4. So we can just pretty much come down as a wave 1, wave 2 here. This is a smaller level, wave 3, and a wave 4 pulling back up through here. So the wave 4 up here would be to the 38.2 retracement level, would be the 13365, and the fourth wave of 1 lesser degree would be up at the 13380. So that's really quite possible there. Now we need to have a look at what this structure is here. At this stage here, we can see that that's a nice 1, and that's a 2, and that's a 3. So that could also be an A and a B and a C there. And then we've got down for 1 and back for 2 here, and down for 3 and 4 and 5, and continue to move down. Further down, as we mentioned quite some time ago, our target was around the 132 on coming down here, so that's where you would have need to cover. If you want to accommodate, that's fine, and we're accommodating on the weekly robo seen for the longer term trades to the downside, but this can come back to this point up here. And if this makes a new high above this one here, then we've got a very clear 3, 4, 5 here, an impulse wave. If we've got an impulse wave here, then we're going to get another 5 waves. So we'll have 5 waves here, 3 waves back, and another 5 up here. So that's really possible there. So if we do get 5 waves up through there, then we need to consider that here. So at the moment, this is it on 2-minute chart here. So if this high gets taken out here, that will create the 5th wave there. And that means that after that, we'll have an ABC correction coming back down, and then another 5 waves going back up. So this is going to be, this is a critical sort of area over here. This will dictate to us what the next biggest picture is. However, the S&P 500 and the euro will be moving together, so it's a very good idea to have a look at both of those together, and also, of course, break down the US dollar index as well and try and bring all those guys in together there. If this is going to go up through here, then you want to treat that as the classic trading levels pattern at this stage, and that means that you get a move to this area here, and then you'll get an A and a B and a C wave, and then get back on there and then move up from there. Otherwise, it will be up for 1, back for 2, up for 3, back for 4, and up for 5, taking that high out through there. Then you'd have a larger correction after that. The Australian dollar is also in a sort of small wave 4 as well. We're in a wave 5 coming down through here. I won't go into all of that at the moment, but at this stage here, we've pretty much got down for 1 and back for 2 and down for 3, and we're coming back for 4 now. Wave 4 can come back up much higher here to wave 4 of 1 lesser degree, and then wave 5 to come down. So we've still got one more. We've got the 3rd, 4th, and 5th to come down through there. I'll just see if I can look at that a bit further. It's still part of that then, isn't it? So it's on the close. So that's obviously the bottom of the 3rd wave there. So we've got the 4th wave moving there, and that can move back up to the 4th wave of 1 lesser degree. I need to get that onto a smaller chart there. But anyway, across all markets, we're following a 4th wave to the upside there. So they'll all move together. They're all in fear, and they'll all be looking at each other. So that's that. And the Wednesday and the Thursday, as I mentioned, are going to be the counter trend rally days, and they're the ones that are going to take out our stops. So you need to be working with that situation. Alrighty, good morning and good luck.